Do you think leaving your money in a bank account is safe for 2022? Well, in today's video, I'm going to show you the pros and cons of leaving your money in financial institutions with the current inflation in 2022. Guys, stay tuned. Welcome back to the channel. If you're new to the channel, I'm Credit Coach Q, and I created the first cloud-based software that allows you to put your credit repair experience into your own hands. In today's video, I'm super excited because I have a banger. In today's video, I'm going to show you guys the defaults of having your money in financial institutions. Well, I should really say having majority of your money in financial institutions. But before we get into the video, guys, please like and subscribe to the channel. It helps us actually grow within the YouTube algorithm, and it tells YouTube to push this content to a wider audience and allows me to leave these lights on. Guys, please like and subscribe to the channel. Now, before we actually go into the meat and potatoes of this video, I want to talk about credit repair. If you have any derogatories on your credit report, I mean late payments, charge-offs, collections, medical bills, utility bills, you name it, guys, please head over to mycreditapproved.com. It is the software that I was talking about that allows you to put your full experience into your own hands. It has strategies, it has letters, it has custom templates, it has a section where you can add your own personal statement. Now, the credit bureaus have not been responding to a lot of templates, so adding your personal statement is key. Guys, as you're going to learn in this video, credit repair is going to be essential. The credit repair industry is changing, and you having prime credit is going to be the most critical part of you being financially free going forward. So please go to mycreditapproved.com, handle all of your derogatories, and get your credit cleaned up and get the credit that you deserve. Now, let's talk about the meat and potatoes. Now, I have seen some of my fellow YouTubers actually talk about this topic pretty recently, and it's really warranted. The topic is very necessary, especially in these economic times. Now, I'm going to talk a little bit more about the pros and cons of the banking system, but I want to take a step back of the banking institution as a whole. I want to give a quick banking 101 of how our money supply is actually working currently. Now, in 1971, the President Nixon took us off the gold standard, right? The gold standard was the standard where our money was actually backed by. So every dollar that you have in your pocket, every dollar that you see, and prior to 1971 was backed by how much gold we had in our reserve. So every dollar that we had to be accompanied by the gold that we had in our reserve. So everything was backed by gold. Now, prior to 1971, inflation wasn't a real thing. Now, it was there, but it was very minimal. Now, when Nixon took us off the gold standard, inflation was backed by our dollars. So our dollars was backed by inflation instead of gold. Now that you know that inflation came from taking us off the gold standard, now what you really have to understand there is by doing that, it really created a big bubble or a house of cards, so to speak, right? It created a bubble within our financial institutions worldwide where they were able to print as much money as possible, and the way they was able to offset that was with inflation. So let's give you an example on the banking system currently, okay? Now, if you would have kept $100,000 in your bank account 15 years ago, you would have been able to buy probably 120% more than what you're able to buy now. That's how much you lost in buying power. So, meaning you only get 0.01% interest on the money that you reserve in the bank account. Now, with inflation actually growing, you have to put your money in a position where it's actually constantly moving. Now, before we keep going, I want to add a disclosure. This is not financial advice. This is actually more opinionated than anything. I am not a financial educator. I do not want to be misinterpreted that this is financial advice. Some people, it's crazy. So I want you guys to understand that this is a courtesy understanding from my viewpoint and not financial advice. Now, with that being said, if you would have kept $100,000 and you would have not touched it, you would have lost a lot of the buying power which you was able to spend with that $150,000 because it was stagnant. It was not moving, right? So you have to understand that. Now, what you have to also understand is fractional reserve banking. Now, fractional reserve banking is basically saying that the bank institution have to keep a fraction of what you deposit into the account. Now, the fractional reserve percentage was 10%, right? So that means that every dollar that you deposited into the account, the bank only had to keep inside of the bank $10. So for every $100, the bank only had to keep $10, guys. So if you would have went to the bank and had a wire deposit for $6 million or $1 million, you would not necessarily be able to go to the bank to reap that $1 million in cash because the bank is not required legally to keep that large amount on hand. They're only required to keep 10% of what you actually deposit. Now, you have to understand with COVID and all of these pandemic inflation rates, guys, you have to understand that that is accelerating the process, meaning that the bubble is getting larger and larger and larger. And a lot of economists is honestly believing that the bubble is getting ready to pop. So you have to prep yourself and make sure that you have liquidity on hand where you're not putting yourself in a position where you're backing all of your financial reserves with the banking system. Now, with that being said, you have to also understand that right now it is a liquidity crisis. A liquidity crisis is rampant when it comes to the way the world is structured right now. You also have to understand that they have printed a lot of money. A lot of money has been printed in these last couple of years. Actually, it's been more money printed in the last 2 years than it has been in the last 200 years. And with all of the money being printed, the inflation rates is going to go up with it. Now, if you have all of your money in a bank and inflation takes over where it's actually creating a bubble that eventually pop, and if everyone go get their money at the same time, what does that leave you? Because they, like I said, they are legally required to only keep 10%. Now, this is what I didn't tell you. Now, since COVID has happened, they have changed the guidelines for the fractional reserve banking and allowed the reserve to actually be 0%. So right now they are actually required to only keep 0% of the money that you're actually having available, guys. So you want to make sure that you are putting your money in positions where it is actually moving. Now, like I said, this is not financial advice. This is something that you need to just consider that this is my perspective only. Now, this is something that I've also been saying. A lot of economists have been talking about a Great Depression 2.0. Now, during the Great Depression, a lot of individuals tried to take and withdraw their money during this time period, and the bank wasn't able to provide the money. Now, what do the bank actually do with your money when they get it? When you deposit your money, what do the bank do? The bank actually spend your money, lend your money, and basically put your money in a position where it's actually moving. The banks don't keep money stagnant, and that's the only way to beat inflation. The only way to beat inflation is to have your money moving faster than the inflation rate is going. That's the only way to beat it. Now, the way the inflation rate is going right now, you have to have a reserve, and you want to put your reserve in a place where it is easy accessible. I'm not really putting a large amount of my liquidity and my capital in bank institutions, because if everyone goes to the bank at the same time and the bank can't deliver, the bank was shut down, and ultimately is not putting the consumers in a great position to take care of whatever they need to take care of. Now, you also have to understand during the Great Depression, they actually tried to do this. They actually tried to put themselves in a position to withdraw their money on a large scale, and the bank flopped. Actually, over $140 billion was lost by the consumers because the liquidity was not there in order to satisfy all of the withdrawals. So you need to consider everything that I'm saying, considering that the times is changing and the US dollar is literally losing this value more and more and faster than we have ever seen it. Guys, I've seen this topic on multiple YouTube channels, and it's interesting. I feel like it's very prominent for the times that we're living in, and I think it's something that you need to consider. Guys, if you found any of this information helpful, please like and subscribe to the channel. Like I said, it allows YouTube to push this content to a wider audience and allows us to actually leave the lights on. Guys, please leave a comment and let me know what is your decision and your opinion on this topic. Do you think the bank institutions is actually working in our favor, or do you think the bank institutions is actually putting us in a position where we can succumb to a liquidity crisis? Like I said, that's it, guys. That's all I have. Until next time, guys, take care of your family and take care of your credit. Credit Coach Q out.